Welcome to the Vision and Purpose podcast, where we dive deep into the lives of incredible people who have made a mark on the world. Join us as we explore the journeys, stories, and passions of individuals who have achieved extraordinary feats, shattered barriers, and inspired us all. And now your host, Dr. Sharon H. Porter. Hello, welcome to Vision and Purpose podcast. Today, featuring Mr. David Morgan. David Morgan is a finance and insurance specialist from Chicago, Illinois, and CEO of the Family Insurance. He is the son of a teacher and an accountant. David knew he wanted to create a business that allowed him to teach his clients, but at the same time had no idea what that looked like. Attending both the University of Indianapolis and Northern Illinois University to study finance and marketing, then joining the Army in 2013. He was always looking for his purpose. After leaving the Army, he took a job as an insurance agent with Bankers Life instead of returning to college for the 2017 fall semester for what he believed would just be work experience. And today we're going to talk with Mr. Morgan and find out all about this finance journey. Mr. Morgan, welcome to Vision and Purpose Podcast.
Thank you, Dr. Sharon. It's an honor to be here with you all.
Absolutely. I'm so excited. You have such a rich background and I can't wait to find out a little more about you and this whole finance journey. So could you start out by just sharing a little about your background and how you actually got started in this finance and insurance industry?
Right. So like you said, I was in school. It's actually funny. I was in school, Northern Illinois University at the time, and I was there because growing up in my household, we had to go to college. There was no option. My parents said, you're going to college. That's the only way to be successful. You have no other choice, right? So I went there and I was kind of confused on what I was doing there. And the summer of 2017, my uncle passed away and my aunt did not have any life insurance to obviously take care of the final expenses. And it ended up being like $17,000 out of pocket. At this time, I wasn't thinking about insurance or anything like that. But long story short, a few months later, I had got a call from Bankers Life, probably like 2 or 3 weeks before I was to go back to school. And they said, we saw your resume. We wanted to see if you would be a good fit for our office. And I said, you know what, why not? I don't have anything going on at school, really. I had just broken up with my girlfriend at the time. And school was just not for me. I felt, and I said, you know what, at least I can get some work experience from this whole deal because a bunch of employers wanted work experience. So I said, okay, worst case scenario, I can get a year or a few months of work experience and then return back to college if it doesn't work. Ultimately, that was where God had placed me, and it ended up being a career path that I've been on ever since.
Wow, amazing. Now, would you say that the death of your uncle was the inspiration behind the whole finance and insurance industry?
I would say so. Yes, ma'am. All because I saw the detriment of it. He was the closest death that I experienced at the time. And I wasn't familiar with the financial aspect of life or death. I had no knowledge of it. So when they said that they have to come up with $17,000, it blew my mind. And, you know, obviously at that moment you feel helpless. We don't have thousands of dollars just sitting around, you know. So when I got that call, that same aunt, because I went around my family and I asked them, you know, what do you all think I should do? I, you know, sought some counsel on it. And she was the only one that said to take advantage of the work opportunity because you can always go back to school. So I followed that. My mom said, go back to school. My dad said, go back to school. But something in my spirit just said that I needed to be here to at least learn what this is about so I can educate, especially our community, on why this is so important.
Wow, I love it. So what are some of the current trends in the finance and insurance industry that you find particularly interesting or impactful?
So that's a great question. So one of the main things I see today and right now in today's market is retirement. A lot of people are really unsure, uncertain about how their retirement is going to end up. I mean, I just did an episode on a little TV series that I have on LinkedIn called Black Money, and I spoke about the retirement pretty much status as it stands right now. There was a article from CBS News which said millions of older workers in America today are retiring without a single penny saved in their 401k. So I urge my clients, all of them, to make sure that you diversify your portfolio when it comes to retirement, because the 401k, we've been taught to love it. We've been taught that it's the greatest thing in the world. But the reality of it is it does not benefit us as the consumer. It benefits the government because they get to use that money we put into it and gamble it. And if they lose it, we front the bill. And then it also benefits the corporations that offer it because they get a huge tax break for offering it. So I always tell my clients, there's no security there. Even if you're matching contributions with your employer, look for other things that you can put some money into that is more secure, which I, obviously go over with my clients as well. So that's the big thing in today's market, making sure that your retirement, you have some vehicles in place besides a 401k to secure your financial future.
Wow, that's exactly true. I actually was just talking to one of my book clients about that. We are both 9 to 5ers, but have these businesses. And we
Okay.
were both speaking of that. And so you are exactly right.
Okay. Yes,
Retirement
ma'am.
is huge.
Yes, definitely.
Huge. Oh my goodness. So how has this industry, the whole finance and insurance industry, evolved in recent years? And what do you foresee in the near future?
So back to what I was saying, as far as we need to start looking at other financial vehicles to store our money besides a 401k, besides an IRA. The other thing is understanding that the way the world is going, the market is typically going to steadily decline. So you need to find things that are secure, vehicles that are secure, where you're guaranteed to not lose any money no matter what the market is doing. I urge my clients all the time to, put their money into a life insurance policy, an IUL, called an index universal life policy, because there's no market loss. So even if we went into a Great Depression type of scenario, they would never lose any money, versus you put your money in the stock market or you put your money in a 401k. Not only do you have the risk of losing everything in the stock market, obviously you have a risk of now owing. So, you want to make sure that your money is somewhere secure and safe for the long term, because I just foresee the way the American economy is going and the dollar, all of these things coming crashing down. You want to make sure that you're as secure as possible for the unforeseen future.
Oh, so what part of finance and insurance do you specialize in? And what makes you so passionate about that special part of the industry?
So that's a great question. So I try to be a one-stop shop for my clients when it comes to finance. I so I've spent many years studying finance from just an insurance standpoint. Like I said, when I first started, it was just insurance, making sure that people have their burial taken care of. And then I started learning how to make sure their mortgage can be paid off if they pass away prematurely. And then I found out how they can pay off their mortgage 5 to 15 years earlier without anyone dying. And then I started learning about retirement and the different aspects of how you can never outlive your income with certain retirement vehicles for the rest of your life. You'll never out. It's guaranteed that you'll never outlive it. And then things on a smaller scale like budgeting. I always try to tell my clients the foundation to building financial literacy is, one, budgeting, and two, having a solid life insurance policy in place, because we can build you $1 million portfolio, but if you have 1.5 million in debt, and something happens, now your family owes $500,000. So I always try to get them at a micro basic level of financial literacy and just kind of build from there. So I really couldn't tell you a certain area that I try to specialize in. I try to be as helpful as to my clients and their families as possible when it comes to
Wow,
this
very
industry.
nice. So, how do you approach risk management in the insurance sector? What advice do you have for individuals or businesses, for that matter, for looking for, how to mitigate these risks effectively? And do you work with business owners, or is it just individuals?
Yes, ma'am. Of course. I definitely work with business owners. Actually, when I left bankers, I went to Aflac and I learned the business to business relationship aspect of this business. So, as far as risk management, again, that goes back to what I was saying about the retirement aspect. I have a client out here and he's like, I want to put my money where it's going to grow money. It's going to grow money fast. I'm going to get 30, 40% on my money. I'm like, that's awesome. We can definitely do that. But the very first thing you want to do, you want to put the majority of your money in a vehicle where you will not lose money. That is how you manage risk. They say it's not about how much you make. It's about how much you keep. And that comes from a tax standpoint and then also a saving standpoint. We have to make sure that, one, whatever we put you in, you're not liable from a tax standpoint. My vehicles that I use are tax-free. So my clients are able to access their money tax-free. They don't have any penalties to accessing it. And then the other side of it is we want to make sure that, again, if the market is going crazy on the downside, we're in a red market, we want to make sure that you are not losing anything. So I tell my clients, the way we manage your risk is, one, we protect what you already have in place. If you have a mortgage, if you have student loans, we make sure that that is covered. If you pass away tomorrow, that's covered. That's how we manage that risk so your family doesn't have to deal with that. And then we start working on everything else on top of that. Now we're talking about your retirement. How can we minimize risk for you when you're 65 years old in 30 years, 20 years, and Social Security may not exist? There's a large chance it may not exist. How do we minimize the risk of you having to go work at, Walmart or CVS, like we have to see so many of our elders doing because they were not taught these things. So that is how you manage that risk. First, having a policy in place to cover what you already own, and then you just build on from there through different technique and strategies to, create that financial stronghold for you and your family.
Wow. Wow. So let's shift to investments now. What are some of the essential investment strategies for individuals that are looking to grow their wealth? And we know that this climate today, economically, is not the most sound.
Right.
So what investment tips or strategies can you give?
So before you invest, you want to, one, set a goal for what it is you're trying to accomplish. I always start off with my clients. What is your goal? Why are we talking? What are we doing? Because I can't get water out of a stone. I need to know what exactly your goal is, and then we can put things in place for you to get there. If you have no idea what that is, I say take some time, write it down, pray on it, and then come back to me. And then once you have that goal, we can set you up for success. The other thing is that a lot of people don't know, and some people may disagree with me on this, but when you're setting yourself up for any type of investment or any type of financial future, you want to know how to allocate your funds. Most people get money, they pay their bills first, and then they spend whatever's left. That's the backwards of how you're supposed to do it. You're supposed to get that money, right? Get say $100 bill. You take $10 of that, you put it into a savings account. You let that money for a rainy day fund. You take another $10, you put that into the investment account. That's money that you can risk losing, right? You don't want to lose everything. If you lose $10 out of 100, not that big of a deal, right? So you want to take another $10, put that in the investment. And then you want to take a last $10, which a lot of people, the Jim Rohns and millionaires will all agree on me with when I say this. You want to take 10% and you want to give it away. You want to either put it in church, you want to tithe, you want to put it in a charity, because I'm a big believer that the law of reciprocity. When you give, it comes back to you 10 times over. I'm a strong believer in that. With that last 70%, you take 50% of that and you use that to pay your bills, and you take 20% of that and you use that money to then use it for whatever you want, whether that's you want to buy a new vehicle, or you want to buy some clothes or some nice perfume, whatever the case may be. That 20% is for you. So you also want to enjoy your life, right? So that's how you break down every dollar you get. That's a sound way to break that down. I call it the 70-10-10-10 rule, right? You want to take 70% of that, use that for your needs and your wants, and then you want to take that other 30% and put that in your savings, your investment account, and your charity, right? So those are the foundations to how to build wealth. It puts you in a position where now you can discipline yourself to start putting money aside.
I
Because as you
like
know,
that.
in our community, we have a hard time um, giving money, but also saving money. We get money and it starts burning a hole in our pocket and we just want to spend it. This practice puts you in the mindset and the discipline of not blowing all of your money you have on whatever, goods or wants you want at that moment.
Well, I love that. I love that. And I think hearing you talk, I can even see parents doing that with smaller children, whether it's their allowances or just money that they get. If they start out early, it becomes a habit, right? And then as they grow and begin to work and have a salary or what have you, or their own business, that will be instilled in them. I love that. Thank you for that. Great advice, guys. Y'all better make sure you got that down. So we talked about the investment strategies, but how do you adapt those strategies for different market conditions?
Right. So that is a great question. So the beautiful thing about my strategies is one, I don't deal with anything where you're going to lose money. That's the very first thing. I have referrals that I work with that do, they deal with the more risky investments where you can, make 20% of your money at a given time, and you can also lose 40% of your money at a given time. I don't deal with those. I deal with the secure assets where you won't lose any. So I explain it to my clients, and that's why they're a little bit more eager to work with me, and I don't have to pull their arm to get them to. It's like, look, you're guaranteed to never lose your money. Your money is insured, and you would never lose your money. It's literally impossible to lose your money in every case scenario. Worst case scenario for my clients is if the market crashes, depending on how we set up their asset, their product here, they will just not make anything. They'll get 0% interest on their money, but their principal would always stay level.
I love it. I love that.
Mm-hmm.
Wow. Good information. So what types of insurance do you believe are often overlooked, but can be highly beneficial for individuals or even businesses?
It's a great question. So for my business owners, it would be the key man policies. Key man policy is if you have an employee or if you have a business partner and you guys are, doing your thing together and one of you passes away, that key man policy will provide funds that the surviving business owner can use to replace him or him or her, or put that money towards, the business, just because that other person is not there. So that's a big one that a lot of people are not familiar with, the key man from a business standpoint. And the other side of it is, I would say most 99% of people overlook the power of life insurance. Like I said earlier, you can use a life insurance policy to pay off your mortgage 5 to 15 years earlier. Not only pay it off 5 to 15 years earlier, but get a 20 to 30% discount on the purchase of your home. So if you bought $1 million home, I can save you $200,000 on the overall purchase of your home with a simple life insurance policy, just one. So there's so many different aspects and techniques that you can use with it. You can become your own bank. Like I said, you can use it for retirement planning that most people are not familiar with, and that is one of the things that drives me to spread that financial literacy, because there's so many different things you can do with it.
Wow. And you're right. There are so many different products out there. How do you particularly educate your clients on the different ones that are available and are options for them?
So that's a great question. So again, it always goes back to what their goal is. I ask my client, what do you want to accomplish here? I want to make sure that my debt is covered for when I pass away. It doesn't fall on my wife. Like, okay, let's set you up with a term policy. Your debt is temporary. It's not going to last forever. You need a temporary policy that'll cover that if, God forbid, you pass away in the next 20 or 30 years, right? You have another client that says, well, I want to replace my income when I retire. From there, we will talk about an index universal life policy. And then that's a whole life policy where you're able to build up cash value, and the cash value will pay you a lump sum every single month to replace your income once you retire, right? Depending on how we set it up, we would talk about that aspect of it. And then, of course, you have some clients where, they may be 70 or 80 years old and they just want to make sure that they don't leave a burden to their children and grandchildren. We just say, okay, let's set you up with a small final expense policy, $20,000, $30,000, $10,000, depending on their budget, just to make sure that peace of mind is there so that financial burden doesn't fall on their family.
And do you work with clients all over, or are you restricted to certain states?
Yes, ma'am. I work with clients all over. I have licenses in all 50 states.
Wow, that's amazing. Good to know, Mr. Morgan. So what are some of the key components of a solid financial plan? And I am a believer in a plan, right? So what are some key components? And then how can individuals create one that aligns with their long-term goals? Because you talk a lot about, okay, what are your goals? So what are some components there?
So like I said, the very first component is one, knowing your goal. Right? That's the first component, knowing what you want to accomplish. The second component is knowing yourself, because you have some people who are just shopaholics. They can't hold water, right? Let alone money. So, right, we have to make sure that the individual knows who they are as far as their spending is concerned and what their habits are financially. Once we figure that out, okay, we need to set this money up. We need to put this policy in a trust where you're not able to touch this money, because if it's not in a trust, you'll just go rummaging through it and you'll blow up the whole deal, right? So I have to know, one, the goal, and then two, as I speak with them, I get to learn them and their habits as well. Once we figure out their habits, then we're able to put a real plan in place. And like I was saying earlier, financial literacy starts with life insurance. I'm willing to debate that with anybody. Financial literacy and a sound financial plan, a sound financial goal starts with you having a life insurance policy in place. That life insurance policy is simply for if you pass away while we are getting you towards your goal, everything you have already in place, your home, your income, your family situation, your assets, maybe you have real estate, all of those things are protected from probate. They're protected from legal fees. They're protected from court fees that eat up, if some probate situations last 5 years, 2 years, that's money that's tied up for that amount of time. So we make sure that they have something in place to cover what they already have, right? And then from there, okay, you want to retire at 45, right? You want to retire at 67. We figure out where they are, where they want to be, and then we put the proper vehicles in place for the client. And full disclosure, most of my clients, we use one of two products, so people don't think that this is a super complex thing. We're either using a life insurance policy or an annuity. Those are the only two products that we use, and we customize the product for the individual's need and what it is that they need to accomplish.
Wow. And this whole financial planning, I'm sure depending upon where you are in life, there will be some differences, some changes, right? And so how does the financial plan change as you go through the different stages in life?
Right. So that's a valid question. So I was actually just talking to this with a client of mine, and I actually was going to make a video on this that I put on LinkedIn. If you start putting $100 away for your child who's, let's say, 1.5 years old, by the time they are, what did I say, 25? No, I think 30. By the time they're 30, they would have about $100,000 that they now have access to. Right now, imagine instead of you letting that 30-year-old cash out on that policy, imagine you said, here, I'm going to give this over to you. You're working now. Keep putting $100 away into it. And then when you turn 65, access that money. You're looking at now a couple $100,000, close to $1 million that they would have from just $100 a month when they were 1 year old. Now, if you take that same philosophy and you say, okay, I want to retire in 5 years and I'm 60, $100 isn't going to do it, right? Now we have to get aggressive with how we're funding this policy. So depending on where you are in life from an age standpoint and how soon you want to retire, how soon you want to be financially free, that will determine how aggressive we have to be in funding that. So the older you are, it is a little bit more challenging, just like everything essentially, right? But that's why it's important for us to, if we don't do it, we can at least teach our children how to do it, right? I'm a firm believer of generational wealth. We may not be able to benefit from this knowledge that we found out at a older age, right? But we can pass this information to our teenage children, our young adult children, let them do it. And then, man, they can create generational wealth for our bloodline, for our family that our grandchildren, great grands could benefit from. So the knowledge is the most important part.
Wow. And in this whole finance and insurance industry, trust is so important. A client must feel like they can trust who they're working with. So how do you manage that and build and maintain that trust with your clients?
So that's a great question as well. So I try to treat every client. My philosophy back in the day was I try to treat every client like my grandma. Like I love my grandma. She's 95 now. And that's been my main road dog since I can remember. So I try to treat all of my clients as I would her. She has dementia. I was living with her few years ago, helped taking care of her. It was a struggle, but it helped build a level of patience that I would not have had any other way unless I, had that experience with her. And a lot of my clients are, seniors. A lot of them are elder, so I have to slow down with my speech and walk them through how to access their email and different things like that. So I try to treat everyone the way I would want to be treated and how I would treat my grandmother who may have forgotten where she is due to her dementia. So that's really, I name my business the
Mhm.
Family Insurance because I try to treat all of my clients as if I would my own.
Wow, that's awesome. And one of the things I'm really huge on is paying it forward, giving that wonderful advice to anyone who is aspiring to do what someone else is doing, what I'm doing, what someone else is doing. And so I always like to ask, what can you give? What advice can you give to perhaps a young adult who is desiring to go into this industry, whether it be finance or particularly insurance? What advice would you give them as it relates to what they need to be educated on, their certifications, skill development? What advice can you give them?
Great question. So we are licensed, of course, to do what we do through the state, through the government. But the most important thing I would say, besides the things on paper that really don't mean much, is knowing who you are in your heart. What is your integrity like? Because I've been in this business, and I won't say any names, but I've had managers steal money from me. I've had managers scratch my name off of a policy of my client and put their
Wow.
name. I mean, I've seen fraud on the biggest level in this business. So if you don't have that surety of yourself and that integrity within yourself, and this is a commission business. So if you need to make rent or you need to make that mortgage payment, a lot of people will sacrifice their integrity for that money, right? So you want to make sure that going into this, you have your morals and your principles set in place where no matter what happens, I am not going to sacrifice this. I am not going to give up my belief system for a paycheck because the checks are good, but full disclosure, eventually they get old, right? Eventually they really do get old, but the impact that you make and that love that you get from your clients. I mean, I've had clients crying over the phone because they didn't think they could get a policy. They didn't know these
Wow.
things were possible. That is more valuable than a commission check could ever be. So definitely, if you want to get in this business, make sure that your heart is pure and you go into this business knowing that no matter what happens, you will remain steadfast in your integrity.
Wow. I tell you, just the information you shared, and I know you have the Black Money on LinkedIn, that you're sharing all of this information. I think it's amazing. What are some of your own career milestones, achievements that you have, and then also some of the lessons that you've learned along the way?
Great question. So I'm a consistent top producer in my company. I'm not the top producer. I've never worked that hard to be the top. Those guys are fanatics. But as far as like what I've learned, this business really has shown me myself. Because it forces you to be, it's like a mirror, and it forces you, depending on what you see in that mirror, to either elevate yourself or be content with who you are. I had to elevate myself. I was not patient. I was not the friendliest person to deal with or talk to. I did not like talking to people. I was told that I needed a job behind a desk growing up because I did not like talking to people. I would mumble according to some individuals. So it really forced me to get out of my comfort zone. And that was the main reason why I left school to get into this business, was because I was told that you could never run a business because you don't know how to talk to people. So I said, okay, I hear what you're saying. It hurt hearing that from someone so close, but you may be right. So I'm going to take you on that, and I'm going to force myself to start talking to people. And that was the real reason why I got in this business. And like I said, it just ultimately being the place where God called me to be, to make the most impact, especially for our community, because I pride myself on teaching us how to break these generational poverty chains that we've been in, for so long.
Wow. So, what are some practical personal finance tips that everyone should know to better manage their money? Because we all need to plan for the future.
Yes, ma'am. So the 70-10-10-10 rule, definitely, that's the very first thing that I recommend everyone start doing. If you ever read Just Man in Babylon, great read. It gives you just basic sound financial principles that would work for the Elon Musk of the world and the people who are living paycheck to paycheck from Social Security, right? It's just that aspect of disciplining yourself on how to allocate your funds so you're not overspending, you're not spending on frivolous things, and then also putting things in place where you look back a few months, few years, you now have so much money in your savings account or your investment account. Now you're able to do other things to create that net of financial freedom for you and your family. So that will be the main thing, is that 70-10-10-10.
Yeah, and I actually love that. It's simple enough that you can do that. I love
Yeah,
that.
anyone can do it. And
Yeah.
like you said, teaching the kids that, I'm in the process of creating like a little financial literacy course for
Yeah.
children and their parents, where I'm teaching them how to implement this so that their children, when they're 40, 50 years old, they already have sound financial principles in place and they're not struggling or
Yes.
living paycheck to paycheck.
I love it. I love it. And it has just been, I've learned so much in this little time. So I'm sure our listeners have. And I just need for you to just tell everyone, how can they connect with you? How can they find Black Money on LinkedIn? Just share all of the ways that our listeners can connect and follow you and learn from you and possibly work with you.
Yes, ma'am. So the easiest way is to go to my website, www.thefamilyinsurance.com, all one word. You can request a quote there. You can see some of my reviews from my clients, see exactly the different techniques that we can use for you. You can also follow me on social. My current handle on Instagram and Facebook is, because I'm in the process of creating a YouTube channel called The Lion's Den. So on Facebook and Instagram, you can look me up at Dave DeLion, DE-Lion. And I share gems and different things like that. On LinkedIn, it's my my government name, David Morgan. If you just type in Black Money, hashtag Black Money, or hashtag the family insurance, you'll see my profile picture there. So that was one of the easiest ways to reach out to me.
Wow, well, this indeed has been a treat. It's always good to get information about finance, because we have to be able to manage our
Sure.
finances. And I would even dare say thrive so that we can do more. So I love it, David Morgan. I just want to thank you. Our guest today, David Morgan, finance and insurance specialist. Definitely connect with him and keep getting these gems. So thank you. This is Dr. Sharon H. Porter for Vision and Purpose Podcast. And today we featured David Morgan. Join us next time. Thank you and have a great evening.
Thank you, Dr. Sharon.
Thank you for joining another episode of Vision and Purpose Podcast. Please share, like, and subscribe. Please join us every Thursday at 5 p.m. Eastern Time.